a bigger window for the market to digest this. I think we'll have to watch the developments quite carefully around this one. But the pre-open rates have come through. So before we move to our next guest, quick check on the screen. About a 0.5% decline, well, 0.4% to be precise. That's what the pre-open Nifty is indicating. Where is the pressure? HDFC, Hindalco, Asian Paints, HDFC Bank, IndusInd Bank, and even Reliance. So it's pretty mixed, at least as of now. That's what we're getting on the market in the pre-open. But let's stick to one sector where there's been a lot of activity, hectic action in terms of ordering, a lot of positive sentiment as well. And we're talking about the power space. We have Murtuza Arsiwalla, director at Kotak Institutional Equities, joining in to make sense of this. Among a lot of the sectors that he tracks, I think this is one of them as well. Murtuza, good morning. Great to have you on the show as always. Now, Vivek was telling us about some of your top picks just yesterday, and I think a lot of them are coming in from the power transmission space, stocks like KEC, I think even Kalpataru. So tell us, when we're looking at the power opportunity, what makes you more optimistic on transmission than the other segments? What's the big kicker here?
Essentially, if you look at the transmission segment, it's been less competitive. If you look at, when we look at transmission projects which are being competitively bid, on average, you've had about, 3 or 4 bidders per project. So it's not that competitive, number one. Number two, you've also got, if you look at the return profile for some of the projects that were previously bid and have now got commissioned, the return profiles are pretty attractive as well, well above what the regulated returns were in the case of Power Grid. And that's what keeps us optimistic. It's sort of, in a way, a second-order derivative to play all of the investment that's going in the renewable space in the country, the large targets that the government has.
Okay, so I'm going to dive straight in because we'll be running into market opening as well. You've got a buy, I think, on Power Grid, also on Kalpataru Power and on KEC International. So how are you cutting this up in order of priority and why between these 3 stocks?
So, well, let me just clarify up front. KEC and Kalpataru is something that my colleague in the capital goods space covers. So I'll stick with Power Grid. But specifically on Power Grid, essentially the way we're thinking of it is, there are 2 segments of investment. One is the conventional transmission strengthening schemes, which continue. And, over a period of time, given the large asset base that Power Grid's now built up, you were seeing some moderation in growth. You've got a new leg up in growth essentially coming in because of the investment that's now going to happen for all the transmission infrastructure that you need for the renewable capacity base, that we're targeting to set up. So you've got this second leg of growth, which should help the company accelerate on growth. Healthy return profile, not so competitive. I mean, out of the 16 projects that were awarded in FY23 so far, as many as 12 have been won by Power Grid. So, the competitive intensity is not pretty large. Power Grid continues to dominate. Return profile is good, and you've got a large upcoming opportunity. Even if all of the renewable targets are not met, even if we, let's say, assume a 50% sort of success ratio, that will still keep Power Grid in pretty good state.
Got that. Murtuza, what on the generators as well? Because a lot does seem to be changing, at least on the face of it. Even the guys who are running on imported coal, they have been allowed a pass-through now, at least in the peak summer months. It seems to be far more transparent and fair. And then you have the biggies like NTPC also moving towards the renewable transmission, towards the renewable transition. Would you be looking at generators at all? And what are the triggers to watch out for there? If not now, perhaps later?
So we are constructive on NTPC as well. There is this big transition that they are looking to make on the renewable space. But like I highlighted previously, the transmission is a second order derivative on renewable. Our only concern so far on the renewable space has been that it's far more, the competitive intensity is far more. And the return profiles that we've seen are not as attractive. I wouldn't say they're absent, but they're not as attractive as what we're seeing on the transmission side, and which is why we're finding the Power Grid argument slightly stronger. Coming specifically to your question on imported coal capacities and the pass-through, The pass-through element that's been provided is more temporary in nature. It's for the summer months. We saw that happen last year as well. It was applicable to up to December, and then from Jan to March, again, you've not had that pass-through. You're sort of still living, each quarter at a time as far as you're looking at some of those imported coal-based capacities. And you've not been able to resolve, while we've been talking about it for several sort of quarters now, we've not had a permanent resolution to the issue on imported coal-based capacities. That's something that the market would look forward to. Until that really comes through, I would still sort of hold back on the imported coal-based capacities.
Okay, so then finally, let me ask you the simple question. Is there a dark horse out there in the power sector? I don't know if you track the exchanges as well. I mean, IEX, everyone's quite excited about higher volumes as we get into peak summer. But what do you think would be that, one shining star from the power space next 12 months?
Well, given my own sort of stock picking style, I'd still go with the power grid, then look out for the dark horse, which could sort of substantially surprise us. But nothing that I see in the radar immediately.
Those are, good to hear your thoughts on this space, but you used to track real estate as well. Are you still looking at that space?
Absolutely.
Yesterday Shobha was under pressure. I'm not sure whether or not you'll track it as a coverage, but what is your updated target price and any view on the stock?
We're constructive. Our target price is around 830. The business performance has been good. What's weighing on the stock is various sort of regulatory concerns. The most recent being the IT raid that the company did announce yesterday, and that's weighing on the stock. Previously, we had the promoter chairman sort of take a non-executive role. Prior to that, you had certain issues with sort of local authorities, and those are the issues that are weighing down. So it's more regulatory issues that are weighing on the stock than the underlying business performance or the fundamentals of fair valuation.
So fundamentally, it's looking up, but we'll have to see how these other aspects play out. Thanks so much, Murtuza, for joining in and discussing the main theme, the power stocks, as well as giving us a quick word on Shobha as well.